In this video, we want to talk about Rivian, and the stock has recently received several promising analyst price target updates, including a 80% increase from Wells Fargo. Wells Fargo raised their price target to $18 from $10, citing the company's surprisingly strong Q2 deliveries. Now, to give you some perspective, let's zoom out to the weekly chart, and I've been eyeing this weekly sell level ever since we had this huge drop on earnings. However, this head and shoulder should have gave me indication that price had bottomed, and when the news came out from Volkswagen that they bought a stake in the company, well, that was all that was needed to see the momentum finally move higher. Again, we did have a pullback, and we can see that on the daily chart. We have this gap higher on the news. Price came right into that weekly sell level and declined. But again, momentum was too great. We couldn't even fill that gap at $12. Now price finds itself above all the moving averages, including the key 200-day moving average. When price action is above it, signifies a secular bull market, and when price action is below it, it signifies longer term bearish. Now, before we look at price targets, to get into the actual news. Now, Wells Fargo's changing tune towards Rivian is seemingly the product of slightly better than expected EBITDA losses in the second quarter of $757 million. That's compared to the FactSet's consensus of $859 in losses. This in itself is the result of Rivian's, again, stronger than expected delivery numbers. In the second quarter, they delivered a little under 14,000 vehicles, which beat estimates of about 13.2. The Wells Fargo analyst noted that the company's inventories are stronger and that he is encouraged by the company's new R2 vehicle platform set to hit the markets next year, or in 2 years rather. That said, Wells Fargo remains pessimistic over other aspects of the company's expected financial results this year. As an example, they're losing tens of thousands of dollars each car they create. So they're going through a lot of cash to fund their operations until hopefully they reach break even. Indeed, for fiscal 2024, the bank expects the company's adjusted earnings to come in 7% below consensus estimates and Rivian's own guidance. Now, still, it's difficult to properly value a startup like Rivian or the companies. Now, it's difficult to value them because they're not making any money, so they don't have any earnings per share. While the company clearly has high aspirations evident from its new deal with Volkswagen, Rivian has yet to achieve profitability and is unlikely to do so for years to come. The automobile industry is very capital intensive, and so yes, you need a lot of cash and you need to sell a lot of cars. As it stands, the company is expected to deliver 57,000 vehicles this year, with that figure projected to grow to 382,000 in 2029. Now, you do have another analyst, Mizuho. They raised their price target from $15 from $11, again citing the company's Q2 vehicle deliveries. All right, so kind of getting back to the charts, we are now going to take off this weekly sell level. However, we're going to leave this support resistance band at $15 as a play on a pullback. To your next resistance support band at $24. And that pullback to this band would coincide very nicely with this 200-day moving average, serving as dynamic support. So here's the play. Price declines $2, which would be a pullback and then you have the pending next impulse move higher. Again, scrolling out to that weekly chart, you can see why this would be the target. You had support, now resistance, again at that $24 level. Thanks for watching. Subscribe. Please like the video.